Well, today the Federal Reserve approved the largest interest rate hike since 1994. The goal of this 0.75 of a percentage point increase is to counteract the record high inflation America has been facing. And joining me now on how more about this is Joel Griffith, research fellow at the Heritage Foundation. Joel, welcome back.
Thank you for having me tonight.
Well, as you just heard, this has been the largest interest rate hike in nearly 3 decades. Talk to us more about that.
Well, look, over the last 2 years, the Federal Reserve has been asleep at the wheel. In fact, they've done far worse. Our central bank has printed trillions of dollars, about $80,000 per family of 4. They've injected that into our economy. They've been buying up government debt in order to allow politicians to spend far beyond their means. And a lot of us were warning a year and a half ago that if the Fed keeps printing money to pay for this expansion of government, we're going to end up with inflation. That's exactly what we have today. And now it's a bit amusing because now the Fed is claiming that they're solving the problem. Well, they're forgetting to mention that they actually created the problem. It's like an arsonist who sets fire to a warehouse and then boasts about the pails of bucket that he's throwing onto the fire to extinguish it, all the while his buddies are throwing more gasoline into the back door.
It sounds like a bad dream right there. Well, speaking of inflation,
Yes.
As prices do go up, companies are now engaged in shrinkflation, basically giving consumers less of the product for the same price. Tell us more about this trend that you're seeing.
Look, well, producers know that we as consumers, we're feeling the pinch, but they want us to keep buying. And I think all of us are noticing the bags of peanuts are getting smaller. The toothpaste tubes are getting shorter and narrower. Well, it's not in our imagination. These prices for basic goods are increasing at double-digit rates. Increases on rent, it's 25% year over year. And at the Heritage Foundation, we've gone ahead and we actually show that each and every month, almost each and every month, people in the United States have really seen a pay cut because inflation has been outpacing wage growth almost each and every week over the past year.
And we're still seeing supply chain issues. Feminine hygiene products now, medical dye are the latest items being caught up in this shortage, and it seems like it's never ending. Any of these new items, how can we make this supply chain more resilient?
Well, we need to have our politicians just stop the interference. Look, the original sin with all of this was the shutdowns of the factories and the ports. And a lot of the truckers found it very difficult to go from point A to point B because they couldn't even take restroom breaks in some of these states.
Wow.
So that was the original sin. Now we've complicated it. We have laws in place that say if you want to go from one United States port to another United States port, you have to be on a ship that's constructed in the United States. Well, that rules out 98% of all shipping vessels. And then you have California, where a lot of our goods come in from Asia. We have to truck them across the country. California, during the pandemic, has actually been banning older diesel vehicles, and they've actually been making it difficult for independent truckers to even operate. So a lot of what we see right now with the supply chain problems, it's not the problem of businesses. They haven't caused the problem. It's been state officials, and it's been our federal government officials that have created the supply chain issues.
And no joke, I mean, they're actually thinking about spending even more money up on Capitol Hill. Your thoughts on that?
Well, I think we're getting a taste right now of what happens when you have Congress approving billions of dollars of spending and relying on our central bank to print the money. It results in inflation. Everybody loved getting those stimulus checks in the mailbox not too long ago. A few $1,000s per family, money for the kids. Businesses enjoyed getting cash even though they weren't open. But now we're realizing that there are strings attached. It's called inflation. When you print money to fund government operations to mitigate problems that government cause, someone pays for it, and we're all paying for it right now.
Well, Joel, thank you so much for joining us, and thank you for your time today.
Thank you. Have a good night.